Okay, so welcome back and a very good morning again. Can you let me know, guys, if you all can hear me and see a screen? All good? Yeah. Okay. So we're going into the next part of unit number 10. And now this part is actually not that long. So if we can finish this part off early, what we'll do is we'll start the next one also a little early. The focus area 33, according to our schedule, we are supposed to start it, I think, at around 12:30. We'll see though. If we can finish this in, let's say, around an hour, then we'll keep like a half an hour break because I need to make the slides as well. And then we'll start the next part early. So we can finish off before our normal time. Okay, so let me share the screen. Let's get started. Okay, so this is the next part of unit number 10. So unit number 10, the first part of it is the balance of payment. And then the next part of this is the exchange rates. Now, exchange rates itself is a bit of a long area. So what I've done is I've broken the exchange rate part into two. So focus area 32 is about the initial part of exchange rates. How is the exchange rate determined, the different exchange rate systems, and all of that. And in the next part of it, we will go through the types of this nominal exchange rate, effective exchange rate, and appreciation, depreciation, all of that will go into it in the next part. So we'll first get this done and we'll finish it off. Right. Okay, so starting is with the MCQs 2011. Okay. 2011, the question is saying the value of the Sri Lankan rupee changes from 112 for a US dollar to 208. Guys, can some of you all confirm? Now, in my past paper book, it was 208, but I feel the number is a bit weird. Is it 108 in your past paper book? I typed it based on my one. In my one, it says 208. That's right. It's 108. No? Yeah. So I remember that. That was an issue. Sorry about that. So my past paper book said 208. So it's 108, not 208. So they're saying the value of the Sri Lankan rupee against the US dollar has changed from 112 to 108. Which of the following statements is inconsistent? Now, what has happened here, Lamai? Has the Sri Lankan rupee appreciated or depreciated? Earlier, to buy a dollar, we had to pay 112 rupees. Now we can buy a dollar by paying 108 rupees. That means our rupee has become stronger. So the Sri Lankan rupee has appreciated. The Sri Lankan rupee has appreciated. On the other side, what will happen? If the Sri Lankan rupee appreciates, you will have the US dollar that will depreciate. Okay, so Sri Lankan rupee has appreciated. The US dollar has depreciated. And the question is asking you, which of the following statements is consistent with this information? Okay, so if the Sri Lankan rupee has appreciated, now remember we went through this, Lama, in our special seminar also one by one, we talked about this. So we'll see which one is correct. The Sri Lankan exports to US will become cheap. If your currency appreciates, Lama, will your exports become cheap? If your currency appreciates, your exports become expensive, not cheap. So wrong. Imports from US will now become expensive. Currency appreciates. Whatever you import is cheaper, right? So then that is also wrong. Sri Lankan rupee has depreciated. Wrong. US dollar has appreciated. Wrong. Sri Lankans visiting to US will now be better off. Correct me. Now just imagine I'm going to the US. So if I'm going to the US and let's say I need $100,000. Okay. So earlier, if I need to get $100,000 to travel to US, it's 100,000 into 112. But now it is 100,000 only into 108. So amount of rupees that I need now will be much less. So it's easy for me now to travel. It's cheaper for me to travel. So answer number 5. Okay, then go in the next one, 2012. They're saying if the nominal exchange rate between the dollar and the Sri Lankan rupee has changed from 110 to 135, tell me now what has happened? Has the Sri Lankan rupee appreciated or depreciated? $1, 110 has gone to $1. For US, it will be expensive to visit Sri Lanka. Correct. Sri Lankan rupee has depreciated. Earlier to buy a dollar, we had to pay 110 rupees. Now to buy a dollar, we have to pay 135 rupees. So our Sri Lankan rupee has depreciated. On the other side, you can then say US dollar has appreciated. Okay. Then we look at the answers. Answer says rupee appreciates and dollar depreciates. Is that correct? No, no. Rupee depreciates. Sri Lankan goods will become less expensive to Americans. Is that part correct? If our Sri Lankan rupee depreciates, our goods will be less expensive. Our goods will be cheaper. Correct. That part is correct. And imports of Sri Lankan goods to the US will rise. So they're saying then US will import a lot of our goods. In other words, that means we are exporting, US is importing. That part looks correct now. That can be our answer then. We look at the others. Sri Lankan goods will become more expensive. If Sri Lankan rupee depreciates, our goods become cheaper for them. Wrong. Sri Lankan goods will become more expensive. Again, wrong. Sri Lankan goods will become less expensive. Okay, that part is correct. And imports of Sri Lankan goods to the US will not fall. No, if our goods are less expensive, our imports will actually increase. So you can't say it will fall. So therefore, not this. So answer number 2. Okay. 2012 40 is number 2. Then go in the next one. 2012 41. 41 is saying, under a flexible exchange rate system, the primary mechanism for dealing with temporary disequilibrium of the balance of payment is what? Rigid system of exchange rate control, currency flow from surplus to deficit countries, devaluation or revaluation, appreciation or depreciation, maintaining a tight fiscal policy. A disequilibrium is where either there is excess demand for your currency or excess supply of the dollar or currency. What happens as a result of it in a flexible exchange rate system? Automatically, what happens to the currency? The currency will start to either appreciate or depreciate. If there's so much of dollars coming in, automatically it will start appreciating. If money is going out, it will start depreciating. So your answer there is number 4. Okay. Then 2060. The demand for Sri Lankan rupees in the foreign exchange market is derived from. Can you all tell me now, Mike? When will you, third one will be fixed. When will there be a demand for Sri Lankan rupees? When Sri Lanka gets money or when Sri Lanka pays money? When is there a demand? The demand for the Sri Lankan rupee will come if Sri Lanka is getting money. Okay. So then that is when Sri Lanka gets money. Flexible exchange rate in very short terms, it's your exchange rate determined based on the demand and supply for the currency. Okay. So Sri Lanka gets money. So if Sri Lanka gets money, can you all tell me now when will Sri Lanka get money? Can you give me some examples? When will we get money? If we export, we can get money. If there are any investments coming in, right? Any investments to Sri Lanka, any worker remittances, any tourism that we are getting. So different ways we can get money. Okay, so then look for the answer that goes in line with that. The demand for Sri Lankan rupee is derived from any money coming in. So talk about any money coming in. Answer number 2. Sorry, if I missed a question, let me go back. Exports from Sri Lanka and capital inflows to Sri Lanka. Sorry, I think I've missed a question. Some of you all told me. Sorry, I think I've not put that question here. Let me go back to my slides. 2015, I missed a question. 2015. On. This is 32. I need to go focus area. Give me a second. Capital inflows is like, for example, foreign investments and all of that. Focus area 31, 32. Okay. 2050. Now this one, no? Sorry, I've missed this question. Okay, so 2015 question number 45. They're saying, under a flexible exchange rate system, which of the following should increase the rupee price of a dollar. Now be careful, Lama. When you say rupee price of a dollar, what is the rupee price of a dollar? Now read that multiple times in your head. Rupee price of a dollar, rupee price of a dollar, rupee price of a dollar. So right now, what is the rupee price of a dollar? The rupee price of a dollar right now is 300, somewhere around there, right? The rupee price of a dollar, rupee price of a dollar. They are saying the rupee price of the dollar has increased. So $1 that is 300, now rupee price has increased. Now $1 is 330. So what is that, Lama? Exchange rate appreciation or a depreciation of the Sri Lankan rupee? Rupee price of the dollar has gone up. Rupee price of the dollar right now is 300. Let's say it's gone to 330. That's a depreciation of the Sri Lankan rupee. So then they are saying, which one do you think would have caused that, Lama? When will there be a depreciation of the Sri Lankan rupee? Sri Lankan rupee will depreciate, Lama, if more money goes out from the country. So we'll try to look for answer. We look at each answers. First one, the rate of inflation in the US is greater. What do you think will happen there? In US, if inflation is greater, if inflation is greater, Lamai, will people buy US goods or will people like to buy Sri Lankan goods? What do you think happens then? In US, if inflation is greater, they'll like to buy Sri Lankan. Okay, give me a second, guys. I'll put this into my MacBook. Then I can write on the screen. Hold on. Let me share back my slides. I'll add it to my slide. Okay, this is the 2015 and it's 45. Okay, so we'll go one by one. It's an interesting question. Okay, so if inflation, right, we'll try to analyze all of this. There's a lot of learnings that you can get, Lamai, from this. Okay, so let me try to get the answer for this. So if the rate of inflation in US is greater, we'll try to analyze the answer. What will happen, Lamai? US goods, that means US goods are expensive, right? So if US goods are expensive, what will the US people do, Lamai? They will import more and more from us, right? In their country, inflation is high. Their goods are expensive. So they will buy more and more goods from us. So therefore, what happens? Sri Lankan exports will rise. And will we buy from them, Lamai? In their country, if there is inflation? We will not buy from them, Lamai. So then we will not import from them. Our imports will come down. So then what happens, Lamai? We are exporting more and more. We are not importing much. Will our currency appreciate or depreciate then? If you are exporting more and more to US, not really buying from them, our currency will appreciate. That's a good thing. The Sri Lankan rupee will appreciate because there is more money coming in than the money going out. Then that is not our answer because we are looking for an answer where the Sri Lankan rupee has depreciated. So can't be this. Then the second one, national income rises greater in the US. Right? So if in the US, if US says national income rise, what does that mean? What will US citizens do, Lamai? Remember, there is a connection between national income and imports. So if US people's income increases, what does that mean? US will import more and more. So if US imports more and more, what will happen to the US currency? US dollar will depreciate. If the US dollar depreciates on the other side, what will happen to our Sri Lankan rupee? If one currency depreciates, other currency will appreciate. Sri Lankan rupee will appreciate. Then that is also not our answer because we are looking for an answer where Sri Lankan rupee depreciates. Then third one, increased preference of US citizens for Sri Lankan garments. That's like the first one. So if US likes to buy our garments, that means our exports are increasing. Right? They will buy a lot. As a result, what can happen? Our Sri Lankan rupee can appreciate again. So then not that also. Then a substantial reduction of imports coming to Sri Lanka from US. So now what have we done? We have reduced buying imports from US. So if Sri Lanka reduces imports, what does that mean now? The amount of money going out from the country has reduced, no? We have reduced the amount of imports that we are getting. So amount of money going is reduced. That means what can happen to our exchange rate? Our LKR can again appreciate. That can also not be the answer then. So all 1, 2, 3, 4, all of it talks about Sri Lankan rupee appreciating. Then if you go to the fifth one, they say, Lamai, real interest rate increases greater in the US. So in the US, Lamai, if interest rates are high, right, in US, if interest rates increase, where will people like to invest their money, Lamai? Will people like to invest their money in Sri Lanka or in US? Who is giving a better return for the investor? US is giving a better return. No, US real interest rates are high. So then what happens? If US interest rates increase, more money flows into US. Money flows into US. This is the connection between my monetary policy and exchange rate. Right? When interest rates increase, decrease, money flows happen. Portfolio investment flows. So if US interest rates go up, that means all global investments will go towards that country. And then what will happen to the US dollar if that is the case? Mainly, yes, hot money flows. What will happen to the US dollar if so much of money is going to US because US is giving a better interest rate? The US dollar will start appreciating. So if the US dollar is appreciating, Lamai, what will happen to our Sri Lankan rupee? Sri Lankan rupee will depreciate. So can that be our answer? Yes. Because we are looking for an answer where Sri Lankan rupee depreciates. Second answer, once again, if national income, remember there is a connection between national income and imports we talked about. So national income increases, you will import more and more. If in your country, if people's income goes up, you're going to buy a car, you're going to buy a laptop, you're going to buy a phone. So what does that mean? Your imports rise. That's what number 2 is. So US's national income increases, so US imports more and more. US's currency depreciates. Sri Lankan rupee uptake. Rupee value increases? No, that's a depreciation. Think rupee value now, right now, the rupee value of a dollar is 300. If the rupee value of a dollar increases. So right now, the rupee value is 1 US dollar is 300 LKR. So if the rupee value increases, means now 1 US dollar will be, let's say, 330 LKR. So what is that? That is a depreciation of the Sri Lankan rupee. That's why I said Sri Lankan rupee has to depreciate in this question. Okay. So nice small points, a lot of small things that you could have done. Then 2016 we did Lamai. 2016 in short, since someone wanted me to re-explain. When will there be a demand for Sri Lankan rupees? There is a demand for Sri Lankan rupees when Sri Lanka gets money. So then look for an answer where Sri Lanka is getting money. So when we export, we get money. If any capital inflows, let's say share market investments, any money that comes into our country, there will be a demand. So that's this. Yeah, so in all the other answers, Lama, Sri Lankan rupee will appreciate. Answer 1, 2, 3, 4, Sri Lankan rupee appreciates. Only in the fifth one here, Sri Lankan rupee depreciates. Okay, done. Okay, 2016, there's another one. Other things being unchanged, appreciation of the domestic currency will do what? Will raise world market of imports. Okay, they're talking about imports. So let's say we are importing a barrel of oil. Okay, this barrel of oil in the world market is $100. Now, right now, our Sri Lankan exchange rate, 1 US dollar is 300 LKR. So right now, Lamai, to buy this barrel of oil, how much should we pay? If $1 is 300, to buy this barrel of oil, world market, okay, it's $100. We have to right now pay 30,000 LKR. We have to pay 30,000 to buy this barrel of oil. Now, what if our currency appreciates? What if, let's say, next year, Sri Lankan dollar is not 300? What if the dollar is a 200 and, let's say, 50? So if that is the case, Lamai, then how much should we pay to buy the barrel of oil? To buy the same barrel of oil, because your currency appreciated, now you have to pay. For $1, you only pay 250 now. So to buy this $100 barrel, you have to only pay a 25,000. So what happened, Laman? Because of this appreciation, did the world market, did the world price of the imported barrel change? Did the world price change? No, it's still $100. So you can't say 3 or 4. What happens? The domestic price of it comes down, right? For you, it's more cheaper. Which one is your answer? Number 1. Lowers the domestic price of the imported good. Last one says lowers the value of the domestic currency. That means your currency depreciates. No, if it becomes, this is a appreciation kind of a thing. No. So then no. Okay, answer number 1. Then 2017. If the price of the Japanese yen declines considerably against the Sri Lankan rupee. Okay, now you have to figure this out now. What are they talking about? We'll read it multiple times. Price of the Japanese yen. Price of the Japanese yen. So Japanese yen again, what is the price? So let's say right now the price is, let's say 40 LKR. Just an example. Huh? Price of the Japanese yen. So price of Japanese yen, let's say example, right now it's 40 rupees. That's the exchange rate. So price of the Japanese yen is 40 rupees. Price of Japanese yen declines. So right now it is 40. Maybe the price of the Japanese yen went down to 30. So what happened, Lama? Did the Sri Lankan rupee appreciate or depreciate? Price of the Japanese yen declines. Earlier the price is 40 rupees. Now the price is only 30 rupees. So what has happened? Sri Lankan rupee has, earlier to buy a Japanese yen, we had to pay 40. Now we can buy a Japanese yen by just paying 30. Sri Lankan rupee has appreciated. LKR has appreciated. So if that is the story, now look for an answer that goes in line with this. So if the Sri Lankan rupee appreciates, what do you think will happen? Sri Lankan goods are cheaper for Japanese. If your currency appreciates, will your exports be cheaper? No. If your currency appreciates, your exports become expensive. Wrong. Japanese goods are cheaper to Sri Lankans. What do you think? That is true. Earlier let's say you're buying a good from Japan. That is 1 Japanese yen. Earlier we had to pay 40 rupees. Now by just paying 30 rupees, we can buy it. So that can be the answer. Then demand for Sri Lankan rupees would increase in Japan. So when will Japanese demand for rupees? Japanese will demand for rupees when they have to pay us. No? That is when we export, when there is tourism. Will that increase now? If your currency appreciated, will your exports increase? Will your worker remittances increase? So demand will not actually increase, it will decrease. Then it would encourage Japanese to visit Sri Lanka? No, it will discourage. If it depreciates, all it's good for them. It would encourage more Sri Lankan tourists. Sorry, it would discourage more Sri Lankan. No, it will encourage. So therefore, answer is 2. Guys, remember one by one, why each one of these, we did this in our seminar together. We talked about when the currency appreciates, what happens. I went through one by one: exports, imports, remittances, tourism, current account, all of it. So that story is what you're talking about here. Why not 3? Because it's not demand. Now, demand for Sri Lanka rupees is when Sri Lanka gets money. So demand for Sri Lankan rupees can when Sri Lanka gets money. So when does Sri Lanka get money? Sri Lanka gets money for exports, remittances, all of that. So if your currency appreciates, that is making your exports expensive. That makes your worker remittances discouraged. So as a result, what happens? The demand for Sri Lankan rupee will come down. Price of Japanese yen? No. Price of Sri Lankan rupee is indirect quotation. Price of Japanese yen is direct quotation. So price of the foreign currency. Price of the foreign currency expressed in terms of the domestic currency. That's in direct. Price of the US dollar in terms of rupees. Okay. It will encourage tourist loving. It will not encourage them because when your currency appreciates, it's expensive for them to come to your country. Yes, I'm not going one by one as to how it happens. We have done this very recently in the seminars as well. I've explained this like 10 times in classes also. Okay, so I'm hoping you all were a part of that somewhere, or at least you have learned it somewhere else. Okay, right. Then 2018. 18 is saying the diagram below shows the demand for Sri Lankan rupees and the supply of Sri Lankan rupees in the foreign exchange market of Japanese yen. The market is initially at equilibrium at point K. Okay, so I'll mark K in a red dot. Okay, that means this is the original supply curve. This is the original demand curve. Okay. Then they're saying, what could be the new equilibrium in the foreign exchange market after the foreign exchange market and increase in the demand for imported cars owing to the reduction of import duty on imported cars in Sri Lanka? Okay. So first of all, have they given us the direct quotation or the indirect quotation here? This is the direct or indirect. They're talking about the demand and supply of the Sri Lankan rupee. This is the indirect quotation they have talked about. So then they are saying, Namai, in Sri Lanka, now they have reduced the import duty. And what is happening now? Sri Lanka is importing more and more cars. So if Sri Lanka imports more and more cars, is there a demand for the rupee or is there a supply of the rupee? There will be a supply of the rupee. Supply of the rupee, is it increasing or is it decreasing? If we are importing more and more, supply of the rupee is increasing. That is a rightward shift of your supply curve. So if your supply curve, Lama, shifts to the right, where will your equilibrium point be now? Demand hasn't changed. Supply is shifting to the right. Now, where is your equilibrium? At this yellow dot, no? That is point D. See, name D. Earlier, your equilibrium is K. Now, your supply shifts to the right. So, you go to point D as your equilibrium. Remember, we've done much more complex questions than this, right? Remember, we drew the diagram itself. Each of these situations, if Sri Lanka's imports increase, what will happen? Direct quotation, what will happen in the indirect quotation? All of that is there. But it says demand also increase. That is, you are not reading the question properly. The demand for cars are increasing now. Why does the supply increase? Because Sri Lanka is paying money. Dalama, you put have to know the theory path behind that, right? So if Sri Lanka is importing, if money is going out of the country, Lamai, that means that's a supply of the rupee, demand for the dollar, demand for the dollar, or demand for the yen here, or the dollar. We're not talking about that. That's direct side. We're talking about the supply of the rupee only. So when Sri Lanka pays more and more money, there is a supply of the rupee. The best part, Lama, if you have the recordings of the special seminar, please go through that. If you have my theory class recordings, that is also fine. But more summarized, more specific, you have that. There were around 400 odd people there. So I'm guessing majority of you all were a part of it. Go there. Right. Then the next one, 2020 question number 40. Floating exchange rate refers to, what's a floating exchange rate? The exchange rate failing to adjust when destabilized by shocks, exchange rate maintained by the government through interventions, exchange rate determined based on demand and supply, a situation where excess demand leads to devaluation, excess supply is appreciation. What's a floating exchange rate? Easy one. That's the exchange rate based on what and what? Based on the demand and supply for the currency. That's just the definition of a floating exchange rate, floating or a flexible exchange rate. Done. Then 2020 question number 42. They're saying the diagram below shows the value of the Sri Lankan rupee in terms of dollars. Direct or indirect quotation? This is a indirect. You can, even if you look at the numbers, you can see in Lama, it's an indirect quotation thing. Okay. So now what has happened here? The demand has come down. They are asking you what will be the effect of the shift. They are not asking you why the demand came down. They are asking you what is the effect of it. Now tell me here, Lama, has the Sri Lankan rupee appreciated or depreciated? Earlier, for a dollar, we get 0.006. Sorry, for a rupee, we get $0.006. Now, for a dollar, for a rupee, we are getting only 0.005. This is an appreciation or a depreciation of the LKR. This is a depreciation of the LKR now. Right? I have taught you all how to read this. So Sri Lankan rupee has depreciated. Earlier for a rupee, we get $0.006. Now for a rupee, we are getting only $0.005. So our currency has lost value. It has depreciated. So question is asking, is the question, now be careful. Is the question asking you why did it depreciate? Or is the question asking you as a result of this, what will happen? What's the question asking? The question is saying, what will be the effect of the shift in demand for Sri Lankan rupee? They're asking you now it has depreciated. Because of this, what is the effect? What will happen now? They are not asking you why it depreciated. So as a result of this, Lama, now you all know, no? If the Sri Lankan rupee depreciates, what will happen? You all know exports become cheap, imports become expensive, all of that story you all know. So look for an answer. Sri Lankan exports to the US will be expensive. Is that correct? No. Wrong. Because it will be cheap. It will be cheaper for Sri Lankan tourists to visit to US. Will it be cheap now? If our currency is weak, for us it will be, for them it's good. Sri Lankan treasury bonds will be cheaper. Can that be an answer? Sri Lankan treasury bonds actually can be cheap because our currency has depreciated. Now for them, they can buy it at a lower price. Can be an answer. We look for the others. Sri Lankan treasury bonds will be expensive. Oh, the cost of imports from US will decrease. No, if our currency depreciates, whatever we import is expensive. So not this. So any Sri Lankan thing will be cheaper for them. Whether it's a treasury bond or export or whatever, it will be cheaper for them. So 2020, 42 is number 3. Previous one was also 3. Okay. Then going into the next one, 2021. Question number 42. In a floating exchange rate system, easy one. The balance of payment will always be in a surplus. Balance of payment will always be in a deficit. Completely isolate the economy from external forces. Exchange rates should adjust to equate demand and supply. The government intervenes to influence the determination of the exchange rate. Floating exchange rate is where am I? Simply based on demand and supply, the exchange rate starts adjusting. So that is number 4. Easy, coming from the definition itself. Then going to the next one, 2022. 22, question number 43. In a flexible exchange rate system, an increase in the foreign demand for domestic goods. Okay. Increase in foreign demand for domestic goods. So now let's say US, there is a very high demand for Sri Lankan goods. That means, Lamai, Sri Lankan exports, will it increase or decrease? If there is a big demand for domestic goods, Sri Lankan exports will increase. Sri Lankan exports are increasing here. Are we getting money or paying money? Sri Lanka is getting money then. Sri Lanka gets money. If Sri Lanka is getting money, is there a demand for the foreign currency or a supply of the foreign currency? Sorry, demand for the rupee or supply for the rupee? We have to get money. We have to get money here. There will be a demand for the Sri Lankan rupee. Is the demand for your domestic currency, that means your Sri Lankan rupee, no? So demand for your domestic LKR, is it increasing or decreasing? Now, those people like to buy our goods, they are buying more and more, demand is increasing. If the demand for Sri Lankan rupee increase, now so much of exports are happening, there is so much of demand for the Sri Lankan rupee, will the Sri Lankan rupee appreciate or depreciate? Sri Lankan rupee will, LKR will start appreciating. Okay, so look for an answer that goes in line with this story. Number 1, increase in demand for domestic currency, correct. Creating a depreciation, wrong. Reduce demand, no. Increase in demand for domestic currency, correct. Creating an appreciation of the domestic currency, correct. Reduce demand, wrong. Reduce supply, no. So answer is number 3. So all of this, Lamai, comes from this. Remember in the theory class and all of it, I made you all draw these graphs. I made you all draw that, shift the curve when this, and I asked you, yeah, if this happens, what happens? We drew one by one by one. So it is that area that they are testing now. Right now, they might not ask you to draw that graph, but if you know to draw that graph, කියන්නේ ඒක තමයි මෙතන අහන්නේ. They're indirectly testing you that even in past papers, you won't see a lot of those graphs asking to be drawn. What you will see is indirectly they test the thing. Okay, that's the MCQs. Then we have one more. Yeah, and then we can move the essay questions. What is the main role of the IMF? What's the main role? Ensuring a stable exchange rate regime and provide emergency finance assistance to countries facing a crisis in balance of payment. Looks okay. Providing long-term capital investment and assuring balance of payment equilibrium and balanced development of international trade. Is the IMF there to give you a long-term capital investment? Sorry, question is not in the tooth. So then maybe it should be in the next part. But never, we'll do it even if it's not. Reducing poverty by lending money to member countries to improve the standard of living. Removing barriers for foreign direct investment, providing long-term finance to member countries for development. Which one is the IMF's role now? IMF helps you with what? IMF helps you if there are any exchange rate issues, right? And also if you have balance of payment problem. So which one goes in line with that? That is answer number. Oh, it is yesterday also. So answer number 1, right? Ensuring a stable exchange rate and this. Okay. I'm not sure it's on the tube. Maybe I would have mistakenly put it in my slides. Okay, so that's it with the MCQs. Okay, maybe if it's not in the slide, then you can ignore this and add and see how much do you all get. Then there will be 12 MCQs. Good enough mark is at least around the 7, 8-ish. I feel is okay. Okay. Right. We'll then move into the essay questions. After the essay questions, we can then take a break and then we'll go to the other ones after. So going into the essay questions, there is not a lot, Lamai. There's only around 7, 8 essay questions. We can do it. So coming into this, 2011 question number 8, subpart 4. Distinguish between flexible, fixed, and a managed exchange rate. Easy. 6 marks, Lamai. For 2 marks, you can explain each of this. You can write a little bit more detail than what I have given. You have the notes now. I just quickly try to type something during the break we had. So what is a flexible exchange rate or a floating exchange rate? That is where the exchange rate is determined solely based on the demand and supply for the currency. Central bank doesn't really intervene. So in a flexible exchange rate, there will be very much a lot of fluctuations and the currency will continuously appreciate and depreciate to reflect the demand and supply. So a story, talk about it for 2 marks. Then what is a fixed exchange rate system? A fixed exchange rate system is where the monetary authority, maybe the central bank of the country, will officially set the foreign exchange rate at a certain point and they will not let it change. And they will use their foreign reserves and all to somehow keep it at that fixed level. Maybe later on, if they want, they can come and change it. They can either devalue it or they can revalue it. So that is that. Okay. Then what's a managed floating or a dirty floating exchange rate? That is like a combination of these two. That is where the exchange rate is allowed to float between a certain range. Let's say between 290 and 310, Sri Lankan rupee can keep on fluctuating. But if it is going to go above 310 or below 290, then the central bank will intervene. That is that. What about floating? So floating is what I explained now. So floating means flexible. Okay. Right. So for 2 marks, 2 marks, 2 marks, talk about, it's a very easy question. If you can't answer this, you have not learned the unit at all. You just have to talk about it for 2 marks. Then 2012. Describe what is meant by a managed float. So now here you have to put that, explain my floating exchange rate a little bit in detail. So again, same story continuing from the previous one. So you can say a managed floating exchange rate, also known as dirty float, is where the exchange rate is mainly determined based on demand and supply. However, it's not a purely flexible one. If the exchange rate is going to go above a certain limit or beyond a certain limit, the central bank will intervene. How will they intervene, Lamai? By buying and selling reserves. There is a question at the end also, we'll talk about it. Remember, when the exchange rate is going to depreciate, they will supply dollars to the market. If it's going to appreciate a lot, then they will buy up the dollars. They will demand for the dollars. So that they will create an artificial demand and supply and somehow keep the exchange rate at that certain rates. So it's more like a mix of the floating and fixed. Within a certain range, you can keep on going, but not above or below. Like the example I give you all in class also, this is like most of the girls when you want to go out. So between, let's say, 9 o'clock in the morning to 5 o'clock in the evening, you all can go out alone. You can do whatever you want, no problem. But if it is going after that, let's say after 6 o'clock, only your parents will come to pick you. Central bank intervenes. Or let's say you're going early morning on a trip at 4 o'clock in the morning, your parents will also come. So within a certain range, you can do whatever you want. You can freely fluctuate. But if you're trying to go above or below that, central bank intervenes. That's called the managed floating exchange rate system. So that. Then the next one, 2013, again, directly from your theory. I'm not going into explaining each one of these, Lamai. You all should know by now. What are the advantages and disadvantages of a flexible exchange rate system? So I'm directly taking it from my tute and I'm putting. So what are the good side, Lamai? Good side of a flexible or a floating exchange rate is, one, the exchange rate will show the true picture. It will not be overvalued or devalued because it will always adjust and show the true picture. You can say that. Then, given that the exchange rate shows the true picture, you can then say global economic resources would be distributed in a more realistic way. Now, no one will devalue their currency and try to export more and all. None of that will happen. And then also, because the exchange rate is based on demand and supply, central bank doesn't have to intervene then in a fixed or a managed floating. Central bank has to always monitor and try to keep it at a stable level. But here, central bank doesn't have to do that. They can simply let the exchange rate fluctuate based on demand and supply. Central bank can put their focus on internal stability, controlling the interest rates, controlling inflation. They can do that. So you can talk about that. Then also you can say, Lamai, central bank doesn't need to have reserves. Remember, if the central bank wants to control the exchange rate, they have to artificially demand and supply dollars. Now, for that, they have to have reserves. But here they don't have to do that. So central bank doesn't have to maintain a lot of reserves. And also you don't have to have protectionist policies. If the exchange rate is depreciating, you let it depreciate. Then what are the disadvantages of this? Disadvantages of a flexible one is, Lamai, it's always changing. So if it is always changing, what happens? That becomes a barrier, Lamai, for international trade. Now, exporters who are exporting today and they export on credit, 3 months later, they are not sure how much they will get. Now, today, when right now they import raw materials at one rate and they produce it and export it, 6 months later, how much they will get for exports, they don't know. There can be losses and all of it. Then that's a problem. Then, given that there is so much of uncertainty, when the exchange rate is going so much of up and down, what happens? You can say, Lamai, that can have an issue on foreign investments that come into the country. And then there can be a lot of speculators. Remember, speculators, these people who try to make short-term gains out of it. There can be those kind of fellows. And also, since exporters know if the currency depreciates, they will anyway benefit, they will not really focus on improving the product and getting it better. They will just depend on that. So those kind of stuff you can give. So here, Lamai, ideally 2 advantages, 2 disadvantages. It's a 4-mark question. 2 is enough. I don't think they would have expected to give 4 and 4. 8 points are too much. So any 2 advantages, any 2 disadvantages, but don't give very small 2-3 word points, right? Complete points that make sense. Okay. Then going to the next one, 2016. It's an interesting question. 16 is saying, draw an appropriate diagram to show the determination of the external value of the Sri Lankan rupee in terms of dollars. The value of the Sri Lankan rupee in terms of dollars. Direct or indirect quotation. Value of the Sri Lankan rupee in terms of dollars. Value of the Sri Lankan rupee in terms of dollars. They're talking about indirect quotation. Be very careful with that. Now, if they say the other way, value of the US dollar in terms of rupees, $1, 300 rupees, then that is direct. Here, value of the Sri Lankan rupee in terms of US dollars. So they're talking about the indirect quotation. And then they're asking you to draw the diagram and then explain why the demand curve is downward sloping and the supply curve is upward sloping. Okay, so let me explain the story. So let me first draw the diagram. Now, this is the demand for the Sri Lankan rupee in direct quotation. This is the supply of the Sri Lankan rupee. So based on the demand and supply for the Sri Lankan rupee, there is the equilibrium price, equilibrium quantity. And then this is your 1 LKR equals how much US dollars. So let's say 1 LKR is 0.005. Like we had in MCQ, I'll put that number. And then quantity, just you can put any number. You can just say, let's say X. X value. Okay. Now tell me, now this is your diagram. Right? This is your exchange rate diagram. Tell me, Lamai, when is the Sri Lankan rupee supplied? Just for our understanding. When will we supply our rupee? When Sri Lanka pays money or gets money? When will Sri Lanka supply money? When there's an outflow, right? So when Sri Lanka pays. So can you all give me examples when Sri Lanka has to pay? When we import, we have to pay. When repay loans, we have to pay. Loan repayments. So then if we are traveling abroad, interest, all of that, okay, fine. Then when is the Sri Lankan rupee demanded? When will people demand the Sri Lankan rupee? When they have to pay us. That means Sri Lanka is receiving money. So when will Sri Lanka receive money? When will Sri Lanka receive money? Anything if they are paying us, if they are giving us a loan, if they have to pay for our exports, if they are coming to our country, tourism, if remittances, so anything. So exports, tourism, remittances, all of that. Right. So then that story we know. So now I'm going to explain to you why is the demand curve downward sloping and the supply curve upward sloping. Listen carefully. Okay. So we'll start with the demand curve. Let's say now if the right now in my example exchange rate is 0.005. Let's say if the exchange rate comes to 0.004, that means Sri Lankan rupee has appreciated or depreciated. Earlier for $1 we get, earlier for 1 rupee, we get $0.005. Now for 1 rupee, we are getting only $0.004. Value of the rupee has come down. That means Sri Lankan rupee has depreciated. Okay. So if the Sri Lankan rupee has depreciated, Lamai, what happens to our exports? Exports become, I'll explain it with exports. Exports become cheaper or expensive if Sri Lankan rupee depreciates. If Sri Lankan rupee depreciates, my exports become cheap, no? Then they will love to buy our exports. So that means, if they love to buy our exports, what do you think will happen to the quantity demanded of the LKR? So they love to buy our exports now. So they are buying. Now they will demand for more LKR, right? So that is why when this comes down, can you see the quantity demanded is going up? Same way, think of the other side. What if Lamai? Now this is demand. One, I'm just explaining through exports. What if it goes this way? What if, let's say, we go to 0.006? Now that is a appreciation or depreciation. Earlier for a dollar, for a rupee, we got $0.005. Now we are getting $0.006. So then Sri Lankan rupee has appreciated. So if our currency appreciates, why will they like to buy our exports? Now our exports are expensive, right? So now they are not buying our exports. So can you see at the higher currency point, now the quantity demanded is much low. See, when your currency appreciates, the QD is much less because they are not buying our this thing. If your currency depreciates, they love to buy. So there is a negative relationship there, right? That is why Lama is downwards slope. So if your currency value is higher, that means your currency appreciates. It goes 0.006. No one is buying your exports. Exports are expensive. QD comes down. Price increase, QD decrease, downward sloping. If your price comes down, comes 0.004, then it's very cheap for them. Then they will buy. And the quantity demand increases. So that story you have to explain. Then same story in terms of supply. Now we'll look at supply. Supply is when Sri Lanka has to pay. We'll think of it in terms of imports. Now, if our exchange rate depreciates, let's say comes to 0.004, if it is 0.004 now, exchange rate is depreciated. Imports are expensive or cheap. Exchange rate has depreciated. Imports are Sri Lankan imports to Sri Lanka is expensive. Then will we buy a lot of imports if imports are expensive? No, right? So can you see at 0.004, now when will Sri Lanka supply of LKR is when we import. At one way we supply is when you import. So then see at 0.004, the supply of LKR is very less because we are not importing much. Currency has depreciated, very expensive. But what if your currency appreciates? Then imports become, if your currency appreciates, let's say goes to 0.006, now imports are cheap. Then phone ganna, laptop ganna, latest iPhone ganna. That means you're importing a lot and lot. So then what happens to the quantity supplied? Quantity supplied is now very high. So that is the story there. Okay. That is why supply curve is upward sloping. Same logic goes to the direct quotation diagram as well. Direct quotation, the difference is when you're going downwards, it's appreciation, but then the curves also change now. It's the demand and supply curve of the dollar there. So this same logic you can apply, Lamai, for the direct quotation. I want you to think of that for homework. Same logic. Logic is not different. Right? When the currency appreciates, how imports, exports change. When currency depreciates, how imports, exports change, and how that affects your demand and supply for the currency. For a direct quotation, the difference is you will have the demand and the supply of the US dollar. And then you work the other way around. Same logic. So then for this answer, Lamai, for 2 marks, you have to draw the diagram. Right? The answer format will be for 2 marks, the diagram. For 1 mark, why is the demand curve downward sloping? For 1 mark, why the supply curve is upward sloping? My answer here is now not the most complete answer. I just quickly typed it in the break. So it's just the more short form kind of a summarized answer. No, you don't have to put values and all of it. You can mark it as X and P1 and whatever. And you can refer to the marking scheme's answer as well. But understand the story, write a nice answer. This I feel is a good question compared to all these Baba type questions they ask you sometimes. Done. Moving on. 2017. What is meant by external stability? Now, usually external stability is where your exchange rate and all is stable. But then it doesn't necessarily have to mean exchange rate stable. Now, exchange rate can be stable. Now, do you remember during our COVID time, was the exchange rate stable? During COVID and all of it? Is the exchange rate stable? It was, no? Remember, our fellows were using their reserves and all of that, and somehow keeping the exchange rate at around 200. So exchange rate was stable, but does that necessarily mean you have external stability? Not really. On the other end, reserves were falling. There were so much of issues that were happening. So external stability is, we say, is a key goal of the government in an attempt to promote sustainability in your external accounts. See, external stability can be achieved when export income is sufficient to finance import expenditure so that a country can service its foreign liabilities in the medium term to long run. And so ideally, external stability, you don't have to talk about imports, exports. That is where the money that you're getting into your country in terms of dollars is enough to make all your other payments. So if you have, let's say, 20 billion of imports to pay, then you should also be getting around 20 billion of exports, or maybe 10 billion of exports and 10 billion of worker remittances. So if you're getting enough inflows to match your outflows, then your reserves will stay okay, your currency will stay stable, everything will be fine. That is what you call my external stability. See, they're saying there is no direct measure of external stability. Directly, now just because the exchange rate is stable, you can't say external stability, because exchange rate, central bank can artificially keep it fixed. So there is no direct measure of this. So, but rather indicators that can be determined, that can determine the state of the external sector, such as the current account deficit. So if your current account is on a huge deficit, then that means there is a problem, right? Then your net foreign liabilities, are you taking so much of loans? Then that's a problem. So by looking at it, you can see whether it's stable or not. So if your current account is not on a huge deficit, if your liabilities aren't really increasing, that means under external stability. If you can match the amount of money coming in with the money going out, that means you're stable. Internal stability is within your country. If you can keep your inflation, all of those stable, that is internal stability. Right. That's 2017. Question 4. It's only a 2-mark question, so don't have to write too much. Just give in some points. Then 2021. Question number 3. Outline 4 main factors that cause the demand and supply curves to shift in the foreign exchange market. Now, this is the answer that they've given in the marking scheme. I felt this answer can be a little bit better, right? So I feel, Lamai, do you all remember in the TUT, you can talk about, you can combine the points and write actually. So one is you can talk about, Lamai, international trade. So international trade is a thing that affects the demand and supply for the currency. So then international trade, that will depend on, let's say, the demand for Sri Lankan goods, the demand for the foreign goods, that is our imports, exports, no? That is that. So you're talking about that. Another thing is, Lamai, apart from international trade, you have, remember, capital mobility. So capital mobility is all these investments. So, or you can say capital flows. Capital flows. So that can also be a thing. So you can product outline that. So that is here. The amount of money that is coming into your country as investments, how much are your people investing abroad, you can talk about that. Then you can talk about inflation. You can then talk about what? You can talk about this future expected. Now, even for example, speculation. All of those 4 points that affects the demand and supply for your currency. Then even these income flows, primary income, secondary income, all of those. Okay, you can give. This is there in your TUT, Lamai. If you remember, I can't remember the page number though, unit number 10 TUT again. In detail, factors that affect the demand and supply, or factors that affect the exchange rate of a country, I have given. Okay. Right. Then this is the last one that we actually have. 2021, part 4. So this area again has not been tested recent years, in the recent years. This demand supply story hasn't been tested. What is the role of central bank in the following exchange rate systems? In a fixed exchange rate and a managed floating, what's the role? So what is a fixed exchange rate, Laman? A fixed exchange rate is where can drawing graph be tested if they can. I can't say will it come or not, but if they want, they can. So a fixed exchange rate system is where the exchange rate is kept fixed at a certain level by the central bank. But how do you keep it fixed? Remember, I explained that in the seminar as well. Now, Sri Lanka can't, we can't just come and say, my $1 is 200 ki and we can't say $1 is 200 for next 5 years. We are keeping fixed. So how do you keep it fixed? That's what they're asking you, Lamai. What is the role of the central bank? So how does the central bank keep it fixed, Lamai? To keep it fixed, they have to use their foreign reserves. Remember, I explained how China is keeping it fixed. So see, so when there is an excess demand for the currency, right? If there's excess demand for the foreign currency, that means when will we demand the foreign currency? When we have to pay. No? So when we pay, then there is going to be a what? Exchange rate can actually depreciate. So then what happens, Lamai? The central bank will supply dollars to the market. So if there's excess demand, what happens? The central bank would satisfy the excess demand by supplying this. So supplying this from your reserves, you send dollars to the market. So from your, now that is what our central bank was doing. That is what Cabral was doing during the crisis. In 2020, 2021, there is so much of payments we had to make, loan repayments, all of it. If all of that happens, then exchange rate will depreciate. But what did Corporal do? He didn't allow it depreciate. Whatever money we had in reserves, he was selling it to the market. So then exchange rate was stable, but your reserves was coming down. Same way the other side. If there is more and more money coming in, if there is a lot of supply of foreign currency and a demand for your rupee, then your exchange rate can appreciate. Central bank won't allow it. What will they do? Then they will purchase those dollars. Now that is what they are doing right now, Lamai. Right now, Sri Lanka's remittances are doing very well. Tourism is good. Imports are also rising, but right now our current account is in a huge surplus. So then what can happen is your exchange rate can actually appreciate. But you know, if it appreciates, bad for exporters. So central bank is not allowing it to appreciate. They're keeping it at the 300. It can go to maybe even 290, 280, but no, they're keeping it 300. How are they keeping it? They're purchasing the dollars. So that's how you can keep it fixed, Lama. That is there. So then if you go into a managed floating, what is the central bank's role over here? Very similar role, Thamai, but you word it a little different. A managed floating is where the exchange rate will be determined within a certain range purely based on demand and supply. It can go up and down. But if it's going to appreciate a lot or depreciate a lot, then central bank will intervene. Same story here. So when there is a tendency for the currency to depreciate, let's say go below a certain range, then what will the central bank do, Lamai? Again, central bank will then supply dollars and demand rupees. They will buy their own currency. They will buy rupees from the market and give the market dollars. And then they will keep it stable. The other side of it, when there is a tendency for the currency to appreciate, what they will do? That's what they're doing right now. Right now, the currency is going to appreciate. So now they give rupees and buy up the dollars and they build their reserves. So they sell their own currency and they supply the rupees, demand for the dollars, keep it stable. The role is somewhat similar. It's just that you word it a little different. So that's what you have to do. I hope you have logically understood this story. Logically, I have explained this to you, how the central bank actually manages this exchange. Okay, so with that, we are done with focus area number what? Number 32. Is that okay? MCQs and the essay questions. Right? Okay. So with that, we will then wrap it off at this one. We'll start the other one at 12. We should be able to finish off by around 1, I think. 1 hour should be enough. So you have 40 minutes. You can take a break and all of it. I will make the slides for the others as well until that. So at 12, we'll start focus area 33. That's the last one. With that, we are done with unit number 10. Then we only have 2 more classes left. Monday morning, Wednesday morning, 11 and 12. Done. Okay. So I will see y'all at 12. I'll send a message on the group as well. Good job so far. 1 more part for unit 10. See you. Bye-bye. Welcome. Bye.